I'd like to start this video off by saying I am not a financial advisor. Should you choose to invest in Bitcoin or any other asset, do your own research or seek the advice of an actual financial advisor. Now, as you're all aware, we've been dropping. Just like the rest of the global market, everything has been dropping. Actually, the past 2 or 3 days, we have been holding the line right here between 8.4K and 8.7K, 8.8K, something like that. We've been kind of just trading within that range. Now, this to me we should not be really worried about this. If you were looking at the lower time frames like the daily, it looks pretty bad. Especially on the 4-hourly, it definitely looks terrible. But when you zoom out, it doesn't look so bad. Look, when in doubt, you gotta zoom out. Look at the bigger picture. Look at the long-term trend, and you'll see that there's really nothing to worry about right now. Because first off, look at this right here. This is the EMA ribbon. It actually, according to this EMA ribbon, we have actually been in a bull market since across here, and that this was basically a correction. That actually goes back to the prediction. Hold on, let me get rid of all these trend lines. Okay, there we go. This goes back to a prediction that I made way back. I have a video like way back when I started recording these videos. Back around when we were in this general area here towards the bottom of the bear trend here. Now, my prediction was based on it was basing on the fact that this was just a correction here, a bull market, and what my prediction was, what I was using for this prediction was the 2018 support there at roughly $6,000. And basically what my prediction was a simple resistance becomes support, and that's what it was. That's basically what it turned out to be. We broke above the 2018 we broke above the $6,000 resistance. And then of course we peaked roughly near 14,000. Then we came back down and we tested it as support, and then we moved on. That's exactly what my prediction was. And a lot of people were saying that we were going further down, that this was it, that we were going back down to 3,000, maybe 1,000. But I didn't see us going down below 6,000 for this simple reason. The market turned bullish back in April. Yeah, it was April. The market turned bullish in April, and that started a bull market. A lot of people say that this area here was a bear market. I mean, even on the short term, yes, it was a bear market. Even on the mid-term, you could say it was probably a bear market. But on the long term, this technically is all really part of the bull market. I guess you can even consider it the reaccumulation stage of Bitcoin. If you zoom out on a monthly and look at the cycles. But right now, where we are at, we're inside the EMA ribbon here, but we haven't broken below it. We've broken below the EMA ribbon here, but it didn't cross. The EMAs did not cross bearish, so that was a good sign. It means that this bull market is still a bull market. That means we're good. Now, the CMA ribbon here has been pretty good at determining bear market versus bull market. We got to bring up the logarithmic scale here, otherwise this is just going to look stupid. Oh wow. Okay. Yeah, you're gonna have to give me a second to do this shit. I don't know why every time I go to turn to the logarithmic scale, everything just flattens the fuck out. Now, we're going to go back to 2014, 2013. Back when the first halving run peaked up here at $1,100. We ended up going downhill. We fell deep into the EMA ribbon. We broke below it. Then we tried to get back above it. We stayed above it for a little while, but then we broke below it, and that was it. Once we were below it fully, we stayed below it until Bitcoin could get enough momentum to start another bull run, and it broke out here towards the end of 2015, and this is where we started having our golden crosses, and then the EMA ribbon turned bullish, and after it did turn bullish, it was used as support. And as you can see, during this run, it gets used as support many times. And we keep going. We have support here, support up there, keep on going. We have another area of support right there, and then that was the last time it touched down on the EMA ribbon before the 20k peak. And then when we came back from the 20k peak, we dove deep down into the EMA ribbon, and we actually started trading inside of it until we broke below it. Once we broke below it, we got one more leg up almost above it, and then we came back below it, and that was it. We stayed below it. The EMA ribbon held this price down as resistance. And then of course we crashed to 3k, found our bottom. Moving back into 2019 here, we broke back above the EMA ribbon, and of course we had all of our golden crosses and everything turned bullish, and from there it's been bullish ever since. It has not turned back red. It has not had death crosses. I mean, it stayed green. It stayed bullish the entire time. So according to this EMA ribbon, this is one big bull market here. Well, I wouldn't say big as far as Bitcoin's bull markets go. This is technically, it's small, but it's only the beginning of the 2020 Bitcoin block halving bull run. This is just the beginning. This was basically shaking out the weak hands, and this may be a reaction to the global markets. Whether the coronavirus has anything to do with it or not, we're going down. Everything's going down. But Bitcoin, compared to the other markets, has been holding its own pretty damn well. As I mean, now we're going to zoom in. But let's go to the daily here. Now, as you can see on the daily, if you look at the S&P 500 or the Dow Jones or any other of the markets, you'll see red candles all week that basically keep going down. But Bitcoin had 3 long candles here, but then it slowed down and it came to almost a grinding halt, and now it's holding the level just above the 200 EMA right here, and that is a really good sign. That means that we could have the potential to bounce from here. I mean, it still remains possible for us to drop lower from here. We still have the potential to drop as far down as maybe 8.2k, 8k even. But even if we do drop down that far, now I can bring my lines back up, and we're going to switch back to regular chart here. Even if we do drop down that far, it's still not going to it's still not going to tear us down. Hell, even on the daily here, as you can see, the EMA ribbon, we did break below it, but they have not crossed into bearish territory yet, even though we are below it. Actually, we're going to use this. We're going to let's see. Yeah, even on the daily, it takes a little while for this to cross bearish. So it takes a lot of downward price action for this to actually cross into bearish territory. This actually didn't cross bearish until we had to drop from 10k to 8k, and the Chinese pump couldn't get this back to green. It went gray, but it didn't turn green. And if you had actually been using this as an indicator to see when the next bull run was going to start, you would have known from this indicator that it wasn't here, that this was just going to go back downhill. And so it did, and then the EMA those EMAs held us down until around this area right here. Then we started breaking into the EMA, but we didn't quite. The EMA pushed us back down. It pushed us back down one last time right here at the shoulder of this inverse head and shoulders, and then of course when we pumped, it didn't take us very long to break above this EMA, and then we got above it, and of course, we came back down, tested it, and then as we go on, yeah, we broke back below it. I mean, that's where we are now. But the fact that we are below it, it still hasn't crossed bearish yet, so that is a good sign there. And if we bounce here, this will likely not cross bearish. And if we drop here and then bounce from here, this might start to get close to crossing bearish, but it might not fully cross bearish. It might turn gray like it did back where I just showed you at by the Chinese pump. So if you're dollar cost averaging, honestly, this is a good price to be buying in right now. Hell, what I did is I bought in right here where we're currently at. and I'm waiting to see if it drops. If it drops, I'm just gonna buy more. If it doesn't, then well. But these prices are cheap compared to where Bitcoin is likely to go over the course of the next couple of years. By the time this next bull run is over, the average low class, middle class person is not going to be able to afford one Bitcoin. I'm just your average everyday steel worker, and I'm not rich. I can tell you that much right now. I mean, by the end of Bitcoin's run here, I might be pretty wealthy, but I'm not rich. I'm actually where you guys are at. I'm dollar cost averaging. I'm building up my portfolio. I've been buying into Bitcoin. I've been buying into a select few of other cryptocurrencies, ones that I do think that are going to do well over the course of the next couple of years. And that's one thing that you should be doing. Yeah, if you know how to trade the market, yeah, trade the market. Go ahead, get those extra profits in. But make sure but if you want my advice, make sure that you have a stash that you're hodling alongside. Don't trade with your hodl stash. Have two separate stashes, one that you trade with and one that you hodl, or if you are trading with your hodl stash, trade with only like 1% of it. Don't trade any more than like 1% of your stash at any given time. 5% maybe at the maximum. But honestly, personally, I would not use my hodl stash in any trade. I do take a few trades every now and then, but my hodl stash, it doesn't step onto any exchange for any reason whatsoever. My hodl stash only moves numerically when more is added to it. That is basically it. I will not hit that sell trigger for quite some time. I'm only hitting buy, and yeah, buy. You get the point. Buy the dips. Hell, at this point, you could buy the top. You could buy the tops of and still be pretty well off. You'll be a little bit less well off than people who bought the dips. But dollar cost averaging. If you're dollar cost averaging every week, you're buying the tops, you're buying the bottoms, you're buying the halfway points, you're buying the 3/4 points, you're buying the 1/4 points, you're buying the 715 out of 374th point, whatever the fuck that is. Yeah, you're buying here, 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 here, anywhere. Dollar cost averaging, and when you're dollar cost averaging like that, you're averaging it out. That's what this is direct. I just drew a line directly to each of those points that I just pointed out, but the average would be roughly something like this. You would be averaging your money, yeah, I'm having a hard time explaining this because I just got home from work not too long ago. As per freaking usual, I'm tired. And I'm already fucking up, and I'm likely going to fuck up some more. But you get the point. Dollar cost averaging gets you the best price that you can possibly get if you're not good at trading. Or, well, even if you are an experienced trader, you should be hodling too. Everybody should be hodling, to be honest. Yes, take your trades, but keep a hodl stash. Because once these markets take off, and you're never going to see these prices again. I'm not going to say you're never going to see 7,000 again, you're never going to see 8,000 again. I'm not going to say any of that until after price has actually taken the fuck off. And until after we break the all-time high. When we break the all-time high of $20,000, I'll be confident enough to say that we'll never see 10,000 again. Yeah. When we break $20,000, that's when I will say we will never see $10,000 again. So, until that point, there's still a chance to see $10,000 in my mind. Now, dollar cost averaging is the best way to take advantage of this market. Of course, like I said, if you're trading, good. Trade as much as you want, but try to keep a hodl stash. You have to keep an auto stash. Of course, I am no financial advisor. I can't really actually tell you what to do, and you shouldn't take my advice solely to I mean, you can use my advice in combination with the reverse. What the fuck am I saying? Research that you have done. You can use my advice. You can use the other YouTubers' advice with research that you have done, with your own technical analysis that you have done. But never base anything that you do solely on a single or multiple YouTubers. Always do in-depth research into anything that you buy, whether it's cryptocurrency or any other asset. So yeah, if to recap everything that I'm saying here, well, besides dollar cost average part, the market, as far as price action goes, we're fine. There's no need to panic. Even if we drop a little lower, there's no need to panic. Bitcoin's still well on track to its next destination. So, actually, well, I just got how dumb that was to say that, because its next destination could literally be anywhere, and it would be on track to its next destination. Okay, let me rephrase that. Bitcoin is well on its way to where we're expecting it to go. That's a better way to say that. Now, Bitcoin is on track, and there's no need to worry. The regular stock market, the global market, yeah, you might want to start worrying about that there if you have any assets on any other or anywhere besides crypto, or maybe even bonds. From what I'm hearing, the potential for a recession is growing by the day. I've seen people talking about the inverted yield curve. I've seen people talking about other things that are pointing out the fact that well, I can't really say it's a fact yet, but there's a lot of people talking about the idea that we may have started a recession, and it's not, I mean, it's not that it can't happen. I mean, it's possible that we may have started the recession. Let's go to the Dow Jones here. Hold on. There we go. Dow Jones. Yeah. On a daily, you can see that we fell way below the EMA ribbon, and it's already crossing. It's already had a bearish cross. Like, it immediately had a bearish fucking cross, and it's already turned gray. So that's not a good sign. We're far below our 200 daily and exponential moving averages. That's not a good sign. Yeah, we did have a little bit of a bounce there, so that's a plus. But let's go out to the weekly. Let's see where we are on the weekly. We're below the EMA ribbon on the weekly, and as you can see there, this one candle has had a bit of an effect on the EMA ribbon here. The average, you can see every EMA had a sharp turn towards the downwards direction. Every single EMA on this EMA ribbon has had a sharp turn downward. We are still above the 200 weekly moving average and 200 exponential moving average, so that is a good sign. That, I mean, there's still potential that we could bounce off of this. And this coronavirus shit is not helping anything. The coronavirus may not have necessarily started this, though. This may have started because of over-leveraged entities in the market. The amount of over-leveraged entities that was pretty fucking high, I guess. And there's this run that we've been on is not natural. From what I've seen, what I've heard, we should have already had a recession by now, but of course the Fed just kept pumping money into the system, and they just kept holding the market up with their ability to keep fucking printing money and printing money and printing money and printing money. That is a flawed system. There's only so much they can do to keep this from falling. we have gone so far into debt that it is unreal. I think the national debt is at like 23 or 24 trillion dollars now. That is just nuts. That Okay, so watch these charts. Watch, if you have assets, if you haven't sold out of your assets that you have on the in the stock market, be careful. This is something that could turn into a catastrophe. I mean, I don't want to spread any fear or anything, but you have to be realistic about this. If these moving averages don't hold, we could see a much steeper correction, which in turn would be the start of a recession. I mean, I believe there were actually recession fears in this drop too, and it ended up bouncing. But there's always going to be that recession fear. I mean, there's been recession fears when we were going uphill, because everybody's seeing how unnatural this market has been. We're dropping. If we recover today, we're going to be dropping sometime soon, regardless, because this uptrend that we've been on for the last 10 years, it can't last that much longer. There's no way that it can last that much longer. Yeah, maybe the Feds can pump more money in it and get a couple more years out of it, possibly, but I don't see that happening. I think we are going downhill sometime soon. If not soon, now. Just be careful, because things can get a little bumpy, and shit can go south real quick. It just depends on what happens next. Alright, let's see if there's any news. I'm gonna go check to see if there's any news worth talking about. Alright, here's a pretty good news article. The group of investors quietly keeping Bitcoin's price afloat. A new heat map tool shows how large buy and sell orders are keeping the Bitcoin market up or pushing it down. This is how you can watch what whales are doing. So, this heat map, let's scroll down here a bit. Bitcoin's Wisdom's new aggregated order book heat map, on the other hand, merges order books from Bitfinex, BitMEX, and Coinbase into a single graph for the BTC USD market. I skipped down to this part because I just wanted to show you what where the data from the heat map is coming from. And as you can see, three decent sized exchanges, Coinbase being a really fucking large exchange. So now we're going to take a look at this heat map just to show you guys what it actually looks like. And here it is. This is the aggregated heat map, and as you can tell, it's pretty useful. And right here you can see large buy orders here. So when Bitcoin's price came down here, these buy orders got set off, and it pushed the price back up. And you can see some sell orders here pushing the price back down, and so forth. There's the buy and sell orders are the larger they are, the more highlighted they the lighter the color they are. Hold on. I don't think this heat map goes out on larger time frames like 1 day though. When you get out to the 1 day, the heat map kind of disappears. But when you go to the 12-hour, that's the largest time frame it seems to be on, is the 12-hour. But like right here, you can see there's a nice buy wall right here, and it pushed the price back up, but of course it ended up breaking down through it. So this may be something that could be pretty useful for helping you determine where the price could be going. Like right here, for example, there's a nice size buy order right there, and the price went up. There's a bit of a sell right there, and the price went down. But it seems as though that this becomes more accurate when you zoom in. This is the 4-hour. We'll go into the 15-minute. When we go into the 15-minute, it actually shows the buy and sell walls right here on the right there, or the clearly I'm fucking tired. On the price log, the price, whatever the fuck that's called. But yeah, right here recently, this is on the 15-minute, you can see that there were sell orders right there, and it pushed the price down. There's buy orders here. There's buy orders probably down here, roughly just above in the 8.5k area. So if we go down to the 8.5k area, you might expect a bit of a bounce. So this is definitely something that you should add to your list of tools that you use for trading. This could definitely come in use. So I will leave a link to this to that article and to this site in the description below, so you guys can check it out. And with that is all I have for you guys today. I will see you all next time.